Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another trade school, high frequency trading explanation and example video. You see we have weekend, yes, weekend is time of the trade school videos, and the assets are closed for European traders, and so I use this time to explain more in detail on in explanation and in examples why I have done some trades and why not, what you have to care about and what not, and how you can distinguish the direction of the market. So yes, and this video will be in particular again about Fibonacci level, because I get so many questions about Fibonacci level, so I have chosen this video about Fibonacci. And all my trades and all my all my videos are based on those things which I have explained in this ebook. Get this ebook; it's for free. You find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, objection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame and any kind of financial instrument. So get this ebook; it's for free. You'll find the link in the description, and in the description you will find also the link to the Facebook group. Join the Facebook group; don't miss it. So, okay, let me see. Yes, let's start immediately to don't waste time. And yes, let me see what's going on here. I have chosen this video here. So you see here we got a Bollinger Squeeze. Yes, here the Bollinger Squeeze. The EMAs are heading down. Yes, and I will do play. And when there is something, I will stop this video and explain this in detail. So you have seen this rejection. While I'm zooming out, price rejected to above this level here. Yes, but the trend is down. And you see here, that's what I have explained also in the ebook. Yes, here the squeeze of the Bollinger Band, then we got a small consolidation area, and now we get here into a breakout, and that is almost a sign that a trend will follow. Yes, that is a trend. Here we have the box. Yes, this is a box here. This was a box, and price after we broke through this area, you can expect that you get into a trend. Yes, in a nice trend. So this got a rejection here above. Yes, we are below the round number. Yes, we are below the 1.1600. The 100, the 50, yes, and the 20 are heading down. That is a clear sign for a downtrend. Yes, and so what I have done here. Let me see what I have done. I would expect that I would have done a put. Yes, I entered into a put. Yes, also if it's late. Yes, a late point. Yes. But I did a put because I was expecting that price would go down, because, and I can show you that's also why, because this kind of areas here, and that is what I explained so often in my live trading videos, this area here of those two wicks here are showing me a resistance area. Yes, this is now getting resistance. Yes, because we were below this level. Yes, and that would be a put option. Yes, a put option. What is this here? The put option. The put option on resistance in a downtrend. Yes, and that is what I have understood. That price tried to push up, was not able, and then I entered into this put because the overall trend is down. Yes, that is important. We got here the breakout of this box, and now we can expect that there will follow a trend. It's the same thing like when you trade a double top. Yes, after that you can expect a strong downtrend, and after a double bottom you can expect a strong uptrend. The same is valid for the engulfing candle. Yes, after a bullish engulfing candle you expect a uptrend, and after a bearish engulfing candle you expect a downtrend. And so you can do this with everything. After evening star you expect a downtrend. After a morning star you expect an uptrend. All those kind of things. Yes, okay. I have explained them in live trading videos so often. So let me see what happened then, because I think I have done then an explanation here of my ebook. So I will move forward here. Yes, fast, to don't waste this time. So, and you see price has gone down. It was the purchase time was I entered in before the purchase time. Yes. That was, but now is coming the important part. the Fibonacci level. So let me stop here. That is what I want to show you here. So I have chosen here the swing low to swing high. Yes, here that is or from swing low, swing low, from swing high to swing low, which is in all the box. Yes, this is the box which I have explained before. Yes, this box here, which I have explained. Yes, so let me show you this. 1 second. So here, this box, which I have shown you before, yes, is the box where I have put it the range, yes. And why I have done this? Because larger this distance here between the 100 and the 0 is, yes, more far away is here the 161.8, and you see how price reacted here on the 161.8 Fibonacci level, yes. And I have done this put here below the 160.1 Fibonacci level after this candle broke this area, yes. So I entered here below the 161 because I was expecting that the price would go down. But now, because we are here now on the way, I try to figure out where price will react, yes. And for this case, I'm doing a trick. I'm doing here, applying the swing low, swing high, and here where the 261.8 Fibonacci level is, yes. I will draw a horizontal line, and that horizontal line is the use of this line is to show me, to mark me this level. Yes, so okay, let me see if I can show you this now in the video. So I'm choosing here horizontal line, you see, and then I'm applying there where the 261.8 Fibonacci level is, and now it's coming the trick. Now I turn around. I will turn around the 0, yes, this 0, I will put it on the 261.8 level, and the 100 level, I will put it here to the 0 level. Yes, that means that level, I will push it here. Look at this. This level, okay, something is, okay. This level, yes, this 0 level will be pushed to the 261.8 level, and the 100 level I will push it here. So I have here in between is some level, and that level is then the 76.4 or what it is, yes. But here in between is a level to understand if there will be a continuation after this or not, yes. And that is what I'm applying here. So let's see what's happening. Yes, I have to do play because, so I have done play. So you see, I'm turning it around. I'm pushing the 0, which was here, to the 261.8, yes, and the 100 will be pushed here up to the 0 line, which was before, yes. That is what I'm doing here. Look, I'm pushing here the 0 to the 200. This was the 261.8, and then I get the, you see, and then I get the 100 and put it here above where the 0 was. So, and then you see here, yes, the 23.6, which is nothing else than the 76.4, yes. 100 minus 23.6 is 76.4, yes. And that is what I'm doing here to understand what's happening. But we broke through, you see, we broke through the 260, we broke through the 23.6. So this Fibonacci stuff was not any more interesting in this case, because this, while I was drawing, it's gone below this level, yes. And so it doesn't matter anymore, yes. But I waited here to do what? Yes, a call. And why I call? Because of this, look at this. Why I did the call. And the entry point was really late also, yes. I did this call because this is not the 0 level and that is not the 100 level. This level here is a 261.8 Fibonacci level, yes. You have to remember that I have drawn this line here, the 261.8 Fibonacci level, as reference here. This is the horizontal line, is the 261.8 Fibonacci level as reference for this level. And you see how this huge exhaustion candle, yes, stopped exactly on this level. And before it stopped, it has done also a wick here below. Above we have no wick. That means we have nearly no selling pressure, yes. And this wick here below is telling me that we have the first buyers coming in here, yes. And because it's a strong level, I have explained this often, that the 261.8 level is a strong level. The 161.8 Fibonacci level is also a strong level, yes. I expecting there a retracement or a reversal, and that's the reason why I'm entering, because the trend was really strong going down. Here is no green candle. There should be one candle at least, which would be a retracement of this downtrend, yes. You know the part about the candlestick momentum, about the swings, and about the correction and the impulse. Yes, if you have an impulse like this, you need a correction, and that is what I have expected here at the 261.8 Fibonacci level. So yes, market is doing panic here like always. But you see, it's a lot of time. Market is going up and down, yes. But I was pretty much sure that this 261.8 Fibonacci level. And let me see what I'm doing here now. I'm placing the zero level above, yes, and the 100. Again, you see it's close. You see it's close to the 261.8 Fibonacci level. If I would place it, let me see this here. Let me show you this. If I would place it not here on this one, I would place it on this one here, yes? It's only a small movement from here to here. The 261.8 Fibonacci level would be this one, because I have done this before, yes? But now I'm putting it on this one. So, okay, let me continue. And the concept was the same, yes, there should be a retracement, yes, at least, or a pullback, yes, one of both. So, and then, okay, let me see what I'm doing then. Yes, I'm doing here some movements, yes, okay, and after this, I'm turning around again the Fibonacci level. I'm putting here the Fibonacci level again. Let me see. I remove the horizontal line. Let me see. Yes, because now, let me explain this, what I'm doing here. Because now I'm applying, yes, the Fibonacci level, not anymore to the 261.8, which I have done here. Now, because I have seen that this is now a swing high to swing low. Yes, this is a complete swing, because we got here a retracement, yes, or a reversal. Both of them, yes. It's not clear what it is, yes, but anything is happening here. We got here the change of the swing, yes. It was not going anymore down. Now we got here a reversal, yes. On a lower time frame, this is a reversal, and that's the reason why I'm applying now the Fibonacci level from the zero level above, yes, to this lower place to understand where price will stop and or not, yes. And you see that I applied this in this case, and now this candle is stopping. Yes, let me see what's happening here. I'm turning there around something. I'm explaining there something. So, and then after this, I'm not doing a call. You see, I have the mouse on the put. Yes, and then I enter into a put. And why? Because I understood. We have here in general a downtrend. Yes, that is what you don't have to forget. Yes, we have a downtrend. And also, if this candlestick could be a signal that that we have huge buying pressure, yes, that is the difference. And this is the opposite is the case. We have huge selling pressure in this case, yes, because the wick is really long, and this is something like a dragonfly doji, yes. And you see here the 50, the 20, everything is going down. We have a nice downtrend here, and we got here a breakout. And we see, and that is what I have explained so often, the polarity, yes, let me show you, the change of polarity. And that is what I have seen immediately, yes, here, you see this wick here, this small wick, and we see here this wick, yes, and this candlestick which closed below this level, yes, that is support and resistance. So, and this area is the support and resistance zone. In this case, it was first support, it got resistance, this candlestick closed again, so that is a sign that this resistance is still working, and after this I put here immediately on this level, because this was the highest point. That is what the gravestone doji and the dragonfly doji are always pointing out. Yes, a gravestone doji is showing you the lowest point, the lowest low, yes, and the dragonfly doji are showing you the highest high, yes, and the high of the dragonfly doji can be used as resistance. The same is valid for the gravestone doji. The low of the gravestone doji can be used as support, yes. So, and that is what I'm doing here. I'm using this resistance zone signed by this kind and confirmed by this kind of dragonfly doji, that the trend will continue to going down. So, and that was it already, yes. I'm doing this trade in direction of the trend. Here, that was the reversal of the 261.8 Fibonacci level, and here I have done the continuation trades. So, okay, let me see what's happened here. Maybe there is something else to notice. Yes, and you see the fake breakout of the 23.6 level is here again evident. Yes, it's doing some kind of panic, like always, yes, but if you have such long wick, you can expect at least that the price will go below the 50% of this level, and in this case the 50% of this level is a round number, yes, not a really nice round number, it's a 1.1655, but you could mostly expect that price will go below the 50% of this level and reach nearly this level here. Yes, that is what about. If it goes immediately there, you can also expect that it will break through this level. In this case, it closed only below the 50%. So, and that was it already. This was that one. After this, I would expect that there will be forming some kind of double bottom. Yes, because you see here we have another area here. This area here will be support level. Yes, and if I would get a rejection from the next candle from this level, I would expect that there will form here some kind of double bottom, and then maybe the price would reverse, because we had here a long downtrend, and so I would expect also that price would get in a reversal. So that was it. If you like this video, do a like. If you didn't subscribe, subscribe to my channel. And if you have something to say, drop me a line in the comment section. So I would say stay safe and bye-bye.